Okay, if I can ask our colleagues Ridian's colleagues to come up on the stage. I can see they're all lurking. Yes, hello there. Oh, Giles. No, James. If I can all ask you to take your spots up there. Thank you very much for coming along, dragging you out on a Monday morning. I apologise. One of my old bosses always once said the great success of business is to look at it a bit like a superhero. A superhero takes over the world, yeah, saves the human race from impending disaster, but they always have a special magic source, a special magic power that's really made them successful, yeah? Something that gets the DNA of what they're all about. So, James, let's start with you. What do you think Funding Circle's magic source is, that special power?
Wow, that's a great question.
What's it really made you big?
Super listening powers. I think in the title of this talk, why have these businesses, all of us here, grown? I think it's about listening to customers and understanding how you can change that. So it's probably a mixture of a superhero who listens a lot and then is able to do things quickly. Because there's one thing listening to people and then just kind of sitting on it and not taking action to Ridian's point. So I think for us it's listening for, we're super passionate about businesses, small businesses. We want to help them succeed, flourish, help the economy. And how do we do that? And every small business will tell you how they hate going to their bank because of the relationship they have with that bank. And so we listened to that and thought, well, how do we build something better?
Do you spend a lot of time talking to them? How do you actually systematically do that?
So we have, we think about this quite a lot. So we have kind of a team which goes out to meet customers every month, videos them, brings them back into the office. Okay. If the employees want to go out and meet the customers, they can join that video trip. So I think it's really important. We are in our sense of purpose, and we are really doing something completely meaningful. We are not just creating a widget. We are helping thousands of businesses around the UK and the US now succeed. And if we can get the team to understand that passion, then we are really going to kind of change the way finance works. And that's very different from a standard business.
Giles, you've spent quite a few years pioneering in the space. You must have worked out what your special power is now.
So my superhero is a backroom boy. My superhero is a manager of credit risk. So we believe we manage credit risk more effectively than anyone in the world. And that's the fundamental building block of what Zopa's all about. Yeah. In that instance, longevity is some sort of help in the sense that you accumulate more data. But we simply think we do it smarter and better than anybody else.
And how do you do that smarter and better than anyone else?
Well, I think if you look at how you start building your credit models and how you start building your credit process, you can do it and I'll deliberately characterize two different approaches, which are two extremes. You can either do it, and both, by the way, could be argued to be equally effective. So one way would be to do the Wonga way, which would be that you would lend lots and lots of money to people fairly indiscriminately on the basis that you would find out very quickly, and in their case, they have a considerable advantage that they lend over very short terms, and they can learn from that initial lending who not to lend to in the future, and therefore they can build a sort of good set out of that somewhat arbitrary early set.
So lots and lots of big data.
Lots and lots of trial and error on the error side. Or you can do what we did, which was the exact opposite, which is acknowledging the fact that we have to build trust in an entirely new industry. And therefore, we didn't want to make lots of random, indiscriminate lending decisions that would go wrong. And you end up being hyper conservative. So you end up saying, I'm going to lend money to people in the first few years, and none of it's going to go bad. And that's an enormous inhibitor for my growth. But I will learn from the set of people that I didn't lend to, because I can then analyze what happened to those people. So it's a far longer term, and in a world where you're trying to build trust, a much more sustainable model for building credit models that really work.
Very interesting. I will come back to each of these in turn. Ridian, I think you've probably given the game away. I think we know what your superpower is. It's about culture, isn't it?
Yeah, well, can I have another one?
Yeah. So you've got two superpowers.
Well, I'd say that we haven't proven that we've got superpowers yet, any of us, in managing businesses and actually sort of going beyond this phrase. Yeah. So I think if I had to identify one, it's that we had a very clear idea, a very clear motivation and sense of purpose about delivering one thing, and we've executed well. And that one thing is that for some reason, normal people were prevented from getting value on the savings side, and that became so abundantly clear that it was just it drove us enormously to deliver and give people access. So I'd say we had a clear idea and we executed well, and I think if you know exactly what you want to achieve, then things become a lot easier.
Interesting. Again, we'll come back to that. I just want to talk about the word saver. Anna, again, market invoice. What's the one thing that's made you a market leader?
Well, we talked about this as a team, and I think confidence is a really important word. So we want to give businesses the confidence to do things that they couldn't do before. So many of our customers are exporting for the first time, so they're able to deliver their goods and services into new geographies, right? Using market invoice, getting that working capital in the business. Business owners are being able to hire new teams. So, I went and visited a design company, and the CEO pulled me into his office and said, I've hired 10 more graphic designers thanks to having the certainty of having working capital in my business. Yep. But equally, confidence works for the investment side as well, right? And we're super transparent. Investors, when they join, they can see exactly what they're getting into. Our product is short duration, it's secured, the returns are attractive. And that's also very important for us, is that we give a very good risk-adjusted return for our investors, and they have that stability of knowing that their money is going to the place that they want it to go.
Like all successful superheroes and businesses, you must have sleepless nights though. What's the one thing that keeps you awake at night? What's the one risk in your model? Don't worry, I'm going to ask each of them. I'm not picking on you particularly.
Well, look, I think as the company gets bigger, culture is very important, to pick up the theme from Ridian and hiring the right people. I think that's probably the biggest thing that I think about these days is, how do I build the team? How do I get rock stars into the company? Because at the end of the day, culture is what happens when you're not there, right? You cannot always be there. You cannot be on every single item of work that's going on in the company. So you've got to hire the best people.
And when I run into people in your company, you seem to be hiring quite a few. You're growing fast. I mean, how many of you are there now?
We're about 50 now, so we're about 45 in London and a small office in Manchester as well.
And do you think you've got the bandwidth to get to a couple of hundred people, maybe? Because that's not. The reason I'm asking that actually is because the difficulty of hiring credit officers, and it's not insurmountable. I mean, but it's not easy, is it? And other things as well, marketing. I'm going to ask you guys a bit about it. I mean, can you scale?
Yeah, look, obviously scaling is, what we're seeing is that scaling is difficult, very different to the beginning. But I think if you've got a simple proposition, you really believe in what you do, you're not muddling your message, we're super, we have one product.
One product.
And
not tempted to have any more.
And we do it very, very well. And no, I think for us, it's the real focus on working capital is the really big thing for us.
Now, James, I know that, again, you guys have been busily scaling up, busily recruiting people, and you have been looking at new products, haven't you? So can you really scale? How are you going to scale up? Is it being focused on one thing, like invoices with market invoice, loans with you? Are you going to look further, or just expanding your capacity? I want to get that sense of what you can do and what keeps you awake at night.
I think the keeping awake at night is an easy one, and we probably all say the same, is around kind of credit risk, fraud, etc. We do not have businesses if that doesn't work, as we develop, we have more and more data, so we can get better and better at it. We can build better services and procedures to kind of stop that. But that's something which, clearly is stressful to us, and we need to make sure it gets managed. But in terms of kind of scaling up, funding circles in the UK and the US now, we have just north of 250 people across both those countries. Yeah, so there's a significant amount of people there. The question really, in my mind, is what does scaling up really mean? Like, there's a window of opportunity now for everyone in the room with the situation of banks and wider financial services to grow in a fast but controlled and sensible way. So in our mind, scaling up is not about holding back to making sure we're profitable on a cash flow basis. It's about making sure we have enough funding for growth. We look at market opportunities, we attack them, and we essentially give better opportunities to all customers out there. So for us, like in our London office, for example, we are the biggest team is the technology team, because at the end of the day, what we're creating is new infrastructure. Eddie on the stage before was talking about whether everyone here should be a bank. I completely disagree with that. I think there are companies which should be banks, and I think there are companies which are exchanges. At the end of the day, we believe we're a marketplace, so you could say it's an exchange, and we're in the game of pricing risk. So I get up at night when we're not doing that properly, and if we can do that properly, then we should scale and faster than a bank because we're an exchange. So I think there's different things in different business models, which means scaling means different things.
So Giles, what keeps you awake at night?
Well, I don't think you'd be surprised to hear it's all about credit.
Yeah.
But to some extent about our own. We obviously, as we grow, we take measured risk. So that's something that you should clearly worry about. But I also worry about credit risk as a whole in the industry, because I don't think that people necessarily understand the significance of it. They don't know what happened, or people have got very short memories as to what happened.
Do you think people are making bad credit decisions?
I don't know. But I mean, we've seen a couple of platforms come and go generally because of credit issues. So my strong suspicion is people will make bad credit decisions. Whether they are already, I can't comment.
Really, you're picking up there?
Well, I just think I think one important thing is to say is we shouldn't forget that peer-to-peer lending, if I had to define peer-to-peer lending now, I'd say that it's just that the ultimate risk lies with the lender. And therefore, we shouldn't, credit control is a choice according to each platform. But you could argue that one mustn't get too obsessive about it. I mean, can this industry survive if, in our case, somebody doesn't get 100p in the pound, or if on some platforms performances are not good for a while? I mean, stock exchanges survive.
I'm about to say it happens.
Corporate bond exchanges survive.
Yeah.
I mean, the narrative's getting muddled here between are we platforms and exchanges and utilities, for which, and being more kind of we're customer businesses and we protect our customers. I see that as a choice, not necessarily just as the most.
So in effect, what you're sort of saying is that actually, and we'll come back to this issue later on, some people may want the high risk model. They might be happy to take the losses that go with it.
As long as they understand it.
Yeah.
Absolutely.
And we shouldn't deny the crowd the ability to do so.
Yeah.
Because that's the point.
I mean, that's fine, and that's correct. I think where you get into dangerous areas where investors don't know what they're getting themselves into.
Yes.
So what we found is that, despite the fact that investors can be very sophisticated, this is a new product for them. They've never done this before. So we felt it was very helpful to try and simplify the process and make sure that they understand different risk categories and kind of be a steward.
But the reality is they quite often look at the big headline number, don't they? Or the biggest number, and they go, I'll have the biggest number.
Yeah, well, that's why education of investors is very important.
Yeah. I just think we need to be careful that we don't kind of take the glory of this kind of libertarian type narrative of peer-to-peer lending and then at the same time drift back into the sort of people don't understand narrative.
Yeah.
I think people do understand, and I think one of, in most cases, and secondly, I think one of the values of our system is that it doesn't give guarantees and it doesn't give assurances. It kind of puts a little bit more emphasis on the customer, which they like. And I think, there'll be different models and there's going to be different emphasis, but I do note that we must retain this belief that the lender is able to take a choice.
One last question, and then I'll ask you guys to join in the panel in there. Tax wrappers, ISAs, they're coming. I mean, I think we're under no illusions that they're on their way. When they arrive, who knows? And in fact, when do you think they'll arrive? This year, next year?
I think early next year.
Early next year.
Any do you run a market on this?
Yeah, I'd say we should run a book on this, shouldn't we? Yeah. Where's Betfair when you do it? Okay, so coming this year, next year, whenever.
Yeah, and we're all very hopeful that it's actually going to be a lending ISA, so that it will be a third ISA.
Okay, so I was going to ask you. It might be a distinctive ISA. And just put you on the spot, each one of you individually. When it comes in, what material difference will it make to your business in terms of transaction flow? Would you be expecting it just to be a kind of, over the first few years of the ISA, 5 or 10% here, 20% here, or do you think it could really put 50, 100% on your top line? So you, James.
It's going to change the industry.
Yeah.
It's going to change returns.
Yeah.
It's going to be fantastic for retail investors putting money in. What we've been active over the last kind of 18 months on is making sure we have a diverse mix of lenders anyway. So we have kind of institutions lending. We have
for whom it won't make much difference.
Individuals lending as well. So I think what it's going to do is open the floodgates for more retail money coming in, and it's going to raise really interesting questions about how do we manage that as an industry. We are not banks who take money and let it sit there and do nothing.
Yeah, so you've got to deploy it.
I think there's going to be a process, and I think it's about, these guys might know more than me, but I think 90% of ISA money comes in, in the first month of April. So where you run a marketplace, which, obviously all the loans don't go out in April, like how do you manage that? And so I think it's going to be an interesting time. But at the end of the day, I think the growth is defined by finding quality borrowers to lend against. So I think that's going to be the constraint.
Giles, brilliant. 90% of that is going to come in, let's say, April 2016.
Yeah, so I think we're going to have to learn something we've never had to do before, which is manage the supply of money. Yeah. So we've hitherto tended to grow reasonably in tandem without large amounts of unallocated money. So I think that will be a big challenge. I mean, I don't think it will add significantly to the transaction volume that we lend out, because I think that will be limited by the channels we work in and our challenge to grow origination full stop. Okay. But I think one thing that will be very positive is I think it will create an enormous stability of funding. And I think people have long-term views about their ISA money. And I think that's extremely good news.
It's quite sticky money.
Yeah.
William, what would you say? Big difference?
Yeah, I think it will make a big difference. I mean, we're a marketplace and rates will come down and that'll attract more quality borrowers and volume will go up. Okay. You tend to more sophisticated private and institutional.
We don't have a retail product yet. Although with this change, with ISA coming in, we're obviously looking at ways that we can get retail money into our product. But I agree with James. If you've got the right origination of businesses, the money kind of sorts itself out, I think. Okay. Well, look, that's fascinating. And I'm now going to ask these gentlemen, put your hands together for these guys. Thank you very much. And I'm going to ask these guys if they could leave their microphones there. Don't run off with them.